invited today resource person J. Murali sir, chartered accountant, dear faculty members, research scholars, students, and other participants. Very good afternoon, all of you. It is my pleasure to welcome everyone for the final day sessions of PROSA sponsored 10 days National Skill Development Program on GST registration, assessment, and filing of returns, phase 3, under project title Financial Training, Tax Competitions, and Statutory Compliances in Indian Business. Today's topic is assessment of GST. In this session, the assessment of GST appeals interest, demand, and recovery proceedings will be discussed and demonstrated in practical way with examples. The session will be more live, informative, and useful to the participants. I hope that you will enjoy and enrich your skill and knowledge through the sessions. On behalf of Bardiyar University, I feel very happy to welcome resource person J. Murali sir, Chartered Accountant Chennai, for giving a lecture on assessment of GST, the final day sessions of this program. Even though you are having more than 30 years of professional and administrative experiences without any education, you are accepting our invitation to act as a resource person for this program with your busy schedule, sir. I really thank you for accepting our invitation, sir, without your hesitation to act as a sixth time as a resource person for this program. Even though I think today resource person is well known to everyone, I would like to introduce today resource person for the participants who are attending the today's sessions. Really, I am delighted to introduce today resource person J. Murali, Chartered Accountant, Chennai. He is a fellow member of Institute of Chartered Accountants of India. He is in practicing for more than 3 decades. He is having office in KK Nagar, Chennai. He practices in tax-related matters, specializes in indirect taxes. He did BCom from Loyola College, Chennai, MCom from Annamalai University, also MBA from Periyar University. He is also associate member of Institute of Cost Accountants of India. He is an expert committee member of Hindustan Chamber of Commerce for the past 15 years. He was the chairman of Indirect Tax Committee of Chamber for the year 2019-20. He was the co-chairman of VAT and Sales Tax Committee of Andhra Chamber of Commerce for the past 10 years. He was co-opted member of Indirect Tax Committee of SARC of ICAI for the year 2008-2009. He was the president for Association of Chartered Accountants Chennai for the year 2018-19. He was a member of the study group formed by ICAI for TNVAT and TNVAT audit. He is a founder member of Chamber of Indirect Tax Professionals and former president of the Chamber of Indirect Tax Professionals. He was the first president of International Chamber of Indirect Tax Professionals for the year 2013 to 14. He has addressed many forums on indirect taxes. He is a faculty for indirect taxes for Continuous Professional Education Committee ICAI, New Delhi. He is a GST trainer recognized by ICAI. He has addressed meeting in all the professional bodies like ICAI, ICAA, ICSI. He is a visiting faculty in Staff Training Institute of Commercial Taxes Department. He wrote a book that is Handbook on TNVAT Audit for Professionals. He is a author of Handbook on E-Way Bill, published by ICAI. He has also acted as a resource person for the RUSA-sponsored 10 days online National Skill Development Program on GST registration, assessment, filing of returns, Phase 1 and 2, conducted by Department of Commerce, Bardiyar University. He is a very dynamic, enthusiastic, highly energetic, easily approachable, very simple and humble, dedicated, and very good motivator. Without his generosity and support, the program is not successful one. Actually, he is a GST trainer for Tamil Nadu state GST officers and chartered accountants. Fortunately, today also he devotes his time with us because he is very happy to share his views, knowledge with young minds. I request the participants make use of his experience or knowledge. I heartily welcome everyone. I thank you all for your kind cooperation for success of this program. I really invite Murali sir to address in the today's sessions. I heartily welcome you, sir.
Thank you, sir. Thank you for your nice words.
Thank you, sir. Thank you, sir.
Today we are going to see very important topic: assessment, appeals, interest, recovery proceedings, and inspection, search and seizure. So it is very important, and interestingly, in my 33 years of practice, I have done all these things, and it is very interesting because my bread and butter are taken from these assessments, appeals, interest, demand and recovery proceedings, inspection, search and seizure. Thank Bardiyar University for giving me one more opportunity to meet you all. Meeting youngster is a very nice event. Because of that, we will also read. Otherwise, we may not read the intricacies of what we have prepared. Every time when this may be my 2000th meeting, and under GST it may be around 900th meeting. I have been addressing from 1992 onwards. So even though it is my 2000th or 2500th meeting, I read before the meeting. Every time whenever you read, you will get new fresh points so that you can apply your mind and save the skin of our clients. With this prelude, I am entering into the subjects. Per se, the assessment section 59 to 64 deals with the assessment. The assessments are like the student writing the exam. The student who prepares for whole year writing the exam on the completion of 1 year. Similarly, a trader who does business for the whole period files the return and files the annual return in the fag end of the year. The annual return, it should reconcile with the books of accounts. When it is reconciling with the books of accounts, as the student who writes the exam, when she or he writes properly exams, similarly the assessee who files a return properly clears the assessment without any fuss. We will see the type of assessment. The assessment are divided into 5 categories. Provisional assessment, best judgment assessment and summary assessment. Self-assessment. When an assessee files the return, he will have to correlate the miscellaneous income like rent received from commercial property or sale of scrap. It should be reported in the return. Similarly, when you are effecting sale of old used machinery or car, it should be reported in the return. So the self-assessment plays a vital role in the present economy. The GST is a compliance-oriented act. Whenever you complain properly, you need not invite the officer to your place. When the officer comes to your place, he will find more mistakes and you will be penalized accordingly. Then whenever the assessee is not in a provision or not in a position to identify the turnover and rate of tax, he can apply to the proper authority in writing, and the officer will pass order within 90 days from the date of receipt, fixing the turnover or fixing the rate of tax for the turnover. He will have to pay tax on ad hoc basis, and when the assessment is made, if there is any excess paid, it will be refunded. If it is a short paid, you will have to make good the payment. Then comes the best judgment assessment. The best judgment assessment is an assessment where the assessee is not filing the returns, or its registration may be cancelled, but he will be doing business. So whenever in such cases the assessing authority passes an order on best judgment assessment, if the assessee files the return and produce all the relevant records, the assessment can be revised. In all other cases, it will become a final assessment. Then scrutiny assessment. What is scrutiny assessment? Every month, the assessee will be filing the monthly return, reporting the output and input. Whenever there is an error in the return, and on the interest of revenue, the officer can give a notice for the return. Under GST, whenever you reply to the notice properly, your assessment will be made as per your books of accounts. If you are not replying, then the assessment will be cancelled or made on this judgment assessment. Then what is summary assessment? Whenever an assessee is filing the return, and whenever the returns are not up to the mark, the assessing authority can make a summary assessment for the particular month. It is valid till the end of the year. And if the assessee is not happy with the assessment made, he can apply to the Joint Commissioner with relevant records, and the Joint Commissioner may set aside the summary assessment made. Summary assessment is an assessment made between the financial year, and it is valid till the final assessment is made. Before that, if the assessee is aggrieved, he can contact the local Joint Commissioner and produce all the relevant records. Then Joint Commissioner can withdraw or cancel the summary assessment made. What is self-assessment? To declare the turnover, what is the turnover made? That is, whatever turnover you have made, you will have to report the turnover properly. then you will have to clearly give the turnover rate wise, because if the rate is not correct, then the turnover will become wrong. Therefore, the assessee is bound to give the correct turnover under the correct rate. Then he will have to identify the liability from the output. Whenever the output is declared, then the output, that is the turnover is declared, then multiply it with the rate of tax given under the various heads. Then you will arrive at the total tax liability. Now you will have to take the available eligible input. Why I am saying eligible input? You will have to understand a concept. The input which is used for the furtherance of business is eligible for claim under the GST. For example, I am a chartered accountant. I purchase a car for moving around. Then, if by chance I have given my GST number, I would have got the input tax credit from the purchase of car. And as you all know, the purchase of car can give the input tax credit only to 4 assessees. Number 1 is a person who deals with the sale of car. Purchase and sale of car can get the input tax credit. Number 2, a person who moves goods with the 4-wheeler. Then a person who moves passenger in the 4-wheeler. Above all, very interesting to note, the last category is not covered under any act, that is driving school. If you recall the movie Indian, in that Kamal Haasan will be acting like a broker and he will become RTO. So at that point of time, the crazy Mohan will come and ask for license. And he will say, you give 10,000 rupees. He will not give any bill. If such being the case, how can they claim the input tax credit? Because they will not declare the output tax liability. So it is very interesting to bring the driving school into the tax bracket. Then if I am purchasing the car and I have got the input tax credit, as a chartered accountant, I have got the input tax credit. I am not eligible to claim the input tax credit because I don't have right to claim. What I should do? I will have to declare that particular input in my return and reverse the same in the same month. So that being the case, I may not have the input tax credit. Then wherever it is not ineligible or eligible, wherever the ineligible input tax credit is available, I will have to reduce my input tax credit by reversing the ineligible input tax credit. Why I am saying this, you will have to understand. When the returns are not filed in time, the interest levied by the government is 18%. Whereas, if you have wrongly claimed input tax credit, the government will levy interest at the rate of 24%. The government penalizes wrong claim of input tax credit. If you have not reported an output, you can report by paying 18% interest. So it is very easy to account. Then if you are making the ineligible input tax credit not in the same month, after some month, you will have to pay interest for availing the input tax credit. Then to pay the late fees. The late fees is like whenever, say for example, if I am filing the return for the month of August on 12/11/2020, if I am uploading the 3B return, it will upload immediately. But if I want to upload September month return, then it will show the late fee till 12/11/2020. So unless you pay the late fee, the GST will not accept your return. In the S12 regime, you can file the return without making the payment. After that, the officer will have to come to the assessee by giving a attachment order, etc., to collect the money. Now, only if you make the payment, your return will be completed. The returns are filed monthly, quarterly, annually, and finally. I will explain one by one. For a regular dealer whose turnover is more than 5 crores, he will file the monthly return. The regular assessee who is having the turnover of 1.5 crores can also file monthly return, or he can opt for quarterly return. And when you are in composition, you can file quarterly return. Apart from that, if the turnover crosses the limit, you are supposed to file annual return every year. We are now busy with filing the annual return for the period 2018-19, the last date being 31st December 2020. What is final return? GSTR 10 is a return. When you close your business, within 90 days, you will have to file a return called GSTR 10. That will give the closure of your registration. If you are not filing GSTR 10, then one fine morning you will get a notice from the department that you have not filed the return. And if you are filing the nil return also, you will have to pay 20 rupees as late fee per day. So it will be calculated for a longer period, and GSTR 10 should be uploaded, then only the entire liability will cease. And you need not file the return thereafter. Only if you file GSTR 10, your number will be removed from GST portal. Now we are seeing the auto assessment. What is auto assessment? Say for example, I am a dealer, Mr. Jagadishwaran, Madam Kaliswari are my clients, and I am supplying materials to Mr. Jagadishwaran, Madam Kaliswari, and then I am submitting to Mr. Balasubramanian, HOD of Commerce, Arulmigu Kalasilingam College of Arts and Science. So if 3 people are there, whenever I file my GSTR 1, the input will automatically transfer to GSTR 1 of the regular dealer. Then if Mr. Jagadishwaran is a compounding dealer filing GSTR 4, it will be reflected in GSTR 4 of Mr. Jagadishwaran. And assuming that Madam Kaliswari is a input service distributor, then the input will land in GSTR 6 of Madam Kaliswari. So whenever I file the return in GSTR 1, it will be automatically will pass on to the dealers. Now you will ask me, Mr. Jagadishwaran is a compounding dealer. He need not declare purchases. Then why the input is granted to him? because his turnover is restricted to 1.5 crores. And if he is purchasing for 5 crores, then automatically he ceases to be a compounding dealer. He will have to jump into the regular dealer. That is why they are linking the GSTR 4. Then what is input service distributor? Say for example, I am having head office in Chennai and I don't have any output in Chennai. I have branch office in Bangalore, Karnataka, Andhra and Telangana where I make sales, and I may get the common input in the state of Tamil Nadu. In Tamil Nadu I have only input and in other states I have only output. So I can transfer the available input to my respective office or respective branch of Karnataka, Andhra or Telangana by filing a return called GSTR 6. This is in addition to the regular registration. I should have a registration called input service distributor. This is as same as when you have a unit in SEZ, you should have two registration, one normal registration and one for SEZ. And the SEZ registration should be used for claiming the input tax credit. So whenever the 2A is the input register available, and the 2A will be updated with the common input, and at the part A of the 2A will have the input which is related or earned during the previous month, and part B will have the credit from input service distributor. That is, share of my input from my head office will be credited in part B. Then part C will be TDS and TCS credit. What is TDS and TCS credit? If I am dealing with a cooperative society formed by the state government of Tamil Nadu, then if my fees beyond 2.5 lakhs, then what they will do, they will deduct TDS on my payment made. Then it will be deposited to my account by before 10th of next month, and I can claim the TDS in the same month. Similarly, if many of you are professors and the TDS will be deducted in your income tax, and you can use the TDS only in the next year when you file the return. That input tax credit available from TDS can be adjusted in the same month in which it is received. What is TCS? When you are dealing with the e-commerce operator, for example, I am having a what I can say food outlet, and I move the goods by that is I can Amazon or any other service provider, I am using them. Then whatever fees they are receiving, they will deduct tax collected at source and remit it to my account. It will be reflected in my account on 10th of next month. Then I can claim the input available under TCS immediately. It will be landing in part C of 2A. And one Mr. Pon Pandian has asked for auto assessment. I will explain auto assessment. Whenever I file the return in GSTR 1, I am filing GSTR 1 and Mr. Pon Pandian is a dealer and he is purchasing from me. So whenever I file my GSTR 1, the input will be credited to his account. This is called as auto assessment. And similarly, our Jagadishwaran sir is a compounding dealer. He will also receive credit when I file my GSTR 1. And Kaliswari madam is a input service distributor. She will also get the credit immediately when I file the GSTR 1. I hope I have satisfied your request, sir. Then how the matching proceeds? Supplier uploads the outward supply in GSTR 1. Then automatically it will auto-populate the entry in the GSTR 2A of the recipient. Recipient is a person who receives the goods and who makes the payment. The condition here is the recipient should make the payment before 180 days, that is within 6 months. If payment is not made within 180 days, then the input claimed will be reversed. So this is very interesting. You will have to understand the GST is not an act. It devises the business policies, and if you follow the GST, the problem of paying interest will be closed. You will have to comply properly. Every month, an assessee will be filing one return called GSTR 1. It will have the details of the recipient if he is a registered dealer. If he is not a registered dealer, it will be reported from B to C. If he is a registered dealer, it will be reported from B to B. The GSTR return will be filed first. It can be filed up to 12th of next month. When I file the GSTR 1 properly, then all my recipient will get their input tax credit properly. Then with the input tax credit available in 2A, they will have to arrive at the total output liability, reduce the available input tax credit available, then balance, if any, they need to pay. So it is very interesting that you will have to purchase only from regular dealers, not from a person who is not accounting the transaction. If you are purchasing like that, then you will be in deep trouble. And whenever you are filing the annual return, you will have to reconcile the 3B and GSTR 1. Because under GSTR 1, you are declaring the turnover liability. 3B return, you are making the payment of tax after adjusting the input tax credit or eligible input tax credit. So you will have to very cautiously reconcile the turnover between the 3B and GSTR 1. Yesterday, Mr. Ganesh Prabhu would have explained that. Then you will have to reconcile the books with the returns. You will ask me one simple question. Sir, the return is filed only based on the available books of accounts. Then where is the necessity to reconcile the books with the return? You will have to understand practical difficulty in the business. Whenever you are closing your books on tally on 30th of the said month or 31st or the said month, you should not enter the sales register after 31st. If at all you want to enter, you will have to enter in the next month. But as the GST is dynamic, our tally is also dynamic. What the accountant will do, after filing the GSTR 1, he will amend the sales register and increase the sales. Then under 3B, your return will be more. Under GSTR 1, your return will be less. So one portion of input tax credit will not pass on to the said dealer. and you can do it only in the next month. Then you will have to reconcile the trial balance, trading profit and loss account and the balance sheet. Why you should reconcile this? Because in the P&L account, there may be miscellaneous income in the form of sale of scrap or rent received from commercial building. You will have to report that and pay tax accordingly. Similarly, you may have profit on sale of asset. If you are having profit on sale of asset, when the asset is sold, the input output tax to be paid on the assets. So the reconciliation of trial balance, trading profit and loss account and balance sheet are to be made and it should be reconciled. Why we are talking about trial balance here? In my 33 years of practice, only in the last 3 years we are seeing trial balance. Before that, we have not seen trial balance. Why? Because the assessee will give audited trading profit and loss account and balance sheet. The compensating entries were available in trial balance. It will not be reflected in the trading profit and loss account. To reconcile the trial balance, trading profit and loss account and balance sheet, whatever omitted will be reflected. For example, if I am a private limited company or I am a public limited company and having a share capital of 3 crores and I increase my share capital to 20 crores and I engage a broker for subscribing to the capital. He says he will subscribe provided I am giving 1% of whatever money he has brought in. I accept for that. Then he is bringing 20 lakhs, 20 crores. That is 17 crores he is bringing. For 17 crores, I will have to pay 1%. When I pay 1% of 17%, along with that, he will charge me GST at the rate of 18%. So, I may get input even from capital account. You will have to understand. And similarly, if a person is not making the payment to creditors within 6 months, the input claimed is to be reversed. So the reconciliation of balance sheet, profit and loss account and trial balance are required for completion of other assessment. Then the other incomes like commercial rent, royalty, lease are also to be reported in the return and taxes to be paid accordingly. The commercial rent, royalty, lease are liable for taxation at the rate of 18%. And other miscellaneous income are to be included. What is other miscellaneous income? It may be sale of scrap or it may be sale of an asset which was written down. So for that you are liable to pay tax in the return. So the reconciliation of trading profit and loss account and balance sheet with the return is very, very, very important. If you are not declaring this along with your monthly return, and if officer finds it out and levies tax, he will also levy penalty for that. The penalty will be equal amount of tax. So it is better to report the turnover in the return. Then till 2017 July 1st, we have not seen the expenses made in the P&L account. After that, all the expenses reported in P&L account will be checked whether input tax credit is available or not. Except salary, bonus, etc., all other things will get you input tax credit. I will give you a hypothetical example. If you are a company borrowed from the bank, and every year you will have to renew the loan account. When you renew the loan account, they will charge renewal charges, and in that the GST will be charged. And if you purchase checkbook, then for that they will charge you checkbook charges, and they will also levy GST for that. Then folio charges for the accounts maintained at the bank. So for that they will levy GST, and it will be all reflected in your passbook or bank statement. You will have to claim once in 45 days in your return. So if you claim like that, your input will be reduced. When we were doing the audit of 2017-18, we were not allowed to see 2A where the input will be available. The time was extended, then 2A was allowed to be verified. At that point of time, we came to know that many of our clients have got bank charges, that is a GST on bank charges, which is an input, and they claimed all the input before finalizing the return. Then changes in the assets or liabilities to be incorporated in the return. For example, if I have a old car and I am exchanging the car with a new car, for old car I will have to pay tax, and for new car, if there is a liability, it will be charged with the bill, and I cannot take input tax credit on the purchase of car. But if I am selling the car below the book value, I will have to report the turnover as exempted turnover. I need not pay tax on that. This is the latest provision under GST. Then the next example is which I have already explained to you. Share broker agrees to underwrite the capital. So I will be getting input tax credit on the charges made by the broker. I will have to report the input in the monthly return and claim the input tax credit. This is for in the furtherance of business and liable for claim credit. So I can claim the credit. Deletion of asset under the head depreciation schedule. So normally present scenario is, if there is a deletion of asset, we will reduce the value of deletion in the depreciation schedule. We may not declare the asset portion. If the asset is sold beyond the book value, then the difference between book value and the asset value, I will have to pay tax respective to the car that is sold. For other asset, whether there is a profit or not, I will have to charge GST on the net value. Then very interesting thing is reconciliation of input in GSTR 2A. If you ask me to write CA exam once again, I will write CA exam and clear it. But I may not be successful in reconciling the input available in GSTR 2A. Why? Because in 2A the name will not be mentioned, only the GSTN number is mentioned. And you will have to go through whether it is accounted for or not. It is the duty of accountant to check. Then he will have to report wherever there is an error to the auditor. Then auditor will reconcile. Finding the effect or finding the defect is very difficult for the auditor. Why? Because he may not know the GSTN number of all the dealers. Then Whenever you generate e-way bill, your GSTR1 will be automatically updated. You will be updating the return whenever you are filing the return. So there should not be double entry for a single invoice. You will have to reconcile before filing the return. A very interesting point to be discussed is the concept of return under GST is not having revised return. That means you will have to file the return only once. You cannot change. But they have allowed the assessee to claim April to September month return, which is filed on October 22nd. The return should be filed on October 22nd. Then only you can avail the benefit of whatever not reported in the return. For example, when you are verifying the output, you might have missed one or two bills. You can include that in April to September and pay tax accordingly. Similarly, while verifying the input, you might have missed one or two input. That input also you can report between April to September return. And normally when you effect a sale on March, you may be dumping the product in the others' godown and they may return back the goods after the month of March. So what you will do, you will do a credit note and reduce your turnover. When you issue credit note within 6 months from the date of invoice, you can also adjust the taxes paid earlier. Normally it will be done between the April to September month return, and the September month return should be filed on or before October 22nd, which is the last day for Tamil Nadu. And for other states it may change. For Maharashtra it may be 25th. You will have to file the return by 25th. One of my clients came and said that I have not filed the return for September till now. Can I amend the record? I said you cannot amend the record. Even if you amend the record, it will not be corrected in the server. Why? Because you should have filed the return by October 22nd in the state of Tamil Nadu. If you have not filed within that date, it will not be get adjusted. So kindly note, all our clients will come and say, sir, I have not filed September return and I can file my September return now. When they file the September return now, they cannot adjust the input which were not claimed earlier. Why? Because it should have been filed by October 22nd. You should have made payment of tax in October 22nd. If you have not made the payment of tax, you are not liable to take the credit. Then when annual returns filed or verified and accepted, the assessment will be made accordingly. That means your output is matching with the books of accounts and the returns filed. Then your input which are eligible also matches with the returns. Then in that case, there is no necessity to enhance the turnover. If the refund is due in your annual return, then if the annual return is accepted what you have filed, the officer will refund the tax immediately, or he may adjust with the outstanding liability if any. Similarly, when you calculate the tax for output, there is a calculation error and you have paid less. In that case, if the officer finds out the difference, then he will ask you to pay the difference along with the interest, and if you are making the payment immediately, no penalty will be initiated by the assessing authority. Then whatever ITC you have claimed or claimed between April to September of the next year, then we will have to verify whether they are eligible input tax credit. Whatever you have claimed will be adjusted to your account, and you will make the payment only after reducing the input tax credit. Similarly, you might have omitted some turnover up to March 31. Then you can add the turnover in the month of April to September, pay tax accordingly. When you pay tax, you will have to pay 18% interest, if any. Credit notes given in the next year will have to be adjusted in the books. If it is adjusted in the books, then the liability will be reduced. When annual returns are filed and verified and accepted, if any error is noticed by the assessing authority, amend the working, then the turnover may be increased or decreased. When the turnover is increased by the assessing authority, the increased amount, the assessee will have to make the payment immediately. And if the amount is a clerical error, then penalty will not be initiated. If it is not a clerical error, penalty will automatically be levied. So you will have to check whether it is a clerical error or omission. Then whatever input you have claimed, you should have claimed only the eligible input, so that you can avail the input and pay lesser tax. For the financial year 2018-19, up to 2 crores, then 2 crores to 5 crores, GSTR 9 is compulsory, 9C is optional. Beyond 5 crores, GSTR 9 and 9C are compulsory. Because of this, those dealers who have filed the annual return have stopped filing the annual return. Is it beneficial to the assessee or not? You will have to understand a point. Whenever there is an error in your statement, it can be rectified or ratified in the annual return. If you are doing it and ratifying in the annual return, then the penalty scope is restricted. If they give it as optional, means no assessee will be ready to file the return when the turnover is lesser than 2 crores. But it is not correct. They will have to file the returns even if the turnover is lesser than 2 crores. Unless it is filed, they will not be in, unless it is filed. No, if the returns are filed, annual returns are filed, the error can be rectified and penalty can be dropped. So every assessee will have to file the annual return, whether it is optional or whether it is compulsory or not. The turnover declared in the return will be analyzed rate-wise, and the total tax due will be arrived on the total output whatever declared. Then you will have to reduce the eligible input tax credit from the available output tax credit. Then the eligible input will be reduced from output tax due, and if there is any balance after that, it will be paid. If the input tax credit is more, then it will be carried over and claimed in the next month. Then whatever taxes you have paid along with the return, you will have to prepare a statement. The taxes paid may be after adjusting the available input tax credit. It should be verified and taken separately. And the late fee, whatever you have paid, should be reported separately. Why I am saying this is, at times when they extend the time, the late fee may also be cancelled. So it will be retransferred to the cash register of the assessee. So whenever some retransfer is made in the cash register, it will be adjusted in the future. If the taxes are fully paid, then the accepted order will be given. If there is a balance in the taxes, then order will be given. The assessee will have to make good the tax due, or will have to file an appeal if there is error in the assessment order. Whatever excess paid in the assessment order will be refunded to the assessee by passing the refund entry. So the assessee account will be credited with the refund available. Then the reconciliation of 2A. The 2A will have all the input which were earned during the year, and wherever it is to be reversed, ineligible ITC will have to be done. And under the GST Act, ITC assessment is only provisional. Why? Because the other party will have to prove the sufferance of tax. The onus of claiming the input and onus of proving the tax sufferance is only with the person who is a recipient of the goods, or person who claims input tax credit. For example, if I am a dealer, I effect sale to Mr. Jagadishwaran sir, and I have not reported the sale to Jagadishwaran sir, whereas Mr. Jagadishwaran claimed input tax credit on the invoices received from me. Then in that case, he will be penalized by the government official. And more interestingly, the input tax credit assessment is only provisional. Why? Because if it is not proved by the other party, then the liability will come into force. Similarly, the assessing authority will have the mismatch of input tax credit in the returns filed. For example, I am filing a return, and instead of putting 10 lakhs rupees, I omitted one zero and I put 1 lakh rupee. The input, the other party claims the full input. In that case, he will be penalized because of mismatch. And I will also be penalized because I have reported less. So in all these cases, the assessee will be definitely caught. In the original schema of GST, they have said you will have to report your output by 10th. Then you have time up to 15th to rectify your input. And if you accept the whatever input available or reject whatever not eligible to you, then you can complete the payment by 17th. So whenever there is an error, you can make the error in the return, and the other party can rectify before 17th. If it is rectified during the month of during the current month, then you are eligible to rectify you can avail the increased input tax credit. If it is not rectified, you will have to pay the tax now, and whenever it is rectified, you will get the input tax credit. This schema was cancelled because of many pressure. So therefore, the input cannot be rectified now. Similarly, when an assessee fails to report a turnover, but the recipient uploads the turnover and claims the input on the turnover of the dealer will be enhanced. Why? Because there is a mismatch of turnover. It will be enhanced. And the other party will have to pay more tax. Then we are going to see the practical aspect of trading profit and loss account. The opening stock will be the closing stock of the previous year. You will have to verify the closing stock of the previous year. Then whatever purchases you are showing should be reported in GSTR 2A and you should have claimed input tax credit on that. Gross profit will not be reflected elsewhere. And when there is a sales or output, then it will be reported in GSTR 1. Similarly, sales return will be reported in GSTR 1. If it is reported, you can reduce the turnover. Then comes the closing stock. Then we are going into the profit and loss account. In the profit and loss account, credit side, you are having commission received. For the commissions received, you should have reported the turnover under 18% in the GSTR 1. Similarly, if it is a commercial rent received, it is attracting tax in at 18% and it should be reported in GSTR 1. The interest received, if the interest is a bank interest, it is not liable to be taxed. But if it is an interest for the belated payment, it will be attracting tax. So for the belated payment of interest by the customer, you will have to include that in your GSTR 1 and pay tax accordingly. Then for salary, you cannot avail ITC on salary, and electricity, you cannot avail ITC on electricity. Rent paid, if it is a commercial rent, then you could have availed ITC, you will have to check. Traveling and conveyance for the furtherance of business, you can avail the ITC. Staff welfare, beyond 50,000 gift given to the associate, the staff is not eligible for deduction. Then vehicle insurance. If you have claimed ITC on vehicle insurance, you will have to reverse because now it is not eligible to be claimed. Then advocate fees. Advocate fees is a reverse charge mechanism. So it is coming under the section 9(3) of IGST Act. You should have paid the tax on the advocate fees, whatever you have paid on reverse charge, and should have claimed the input tax credit in the subsequent month. You check with the P&L account. Similarly, when you are purchasing laptop new, you claimed the ITC on the new laptop purchase. If it is for the furtherance of business, you can claim the input tax credit. If it is not for furtherance of business, you cannot claim input tax credit. Then motor vehicle. If you purchase a new motor vehicle, you can claim ITC on the purchase of new motor vehicle. Why the bank register and cash register are declared? You will have to check whether the creditors are paid within 6 months and you are eligible for ITC. Then input tax credit match with the electronic credit ledger. Then debtors, check for 180 days. If there is a delay more than 180 days, the input whatever you have given should be reversed. Then capital account, you will have to check whether ITC is there. For capital also ITC will be given. You'll have to check that. Then bank overdraft, you may not get the ITC. Creditors, you will have to check, and you will be having the input tax credit. GST payable match with the electronic credit ledger. Then bank overdraft, you are paying the renewal charges, you will get input tax credit. Then now we are going into next chapter, provisional assessment. When the assessee is not clear about the turnover and the rate of tax, he can apply to the assessing authority or proper authority for guiding him to pay tax. I don't know the turnover, I don't know the rate of tax. Then in that case, you will have to apply to the proper authority in writing. And when you apply within 90 days of receipt of the letter, the authority will pass an order and direct you to pay provisional tax. When you pay the provisional tax, and at the year end, if the provisional tax is less, paid less, you will have to make the good of the balance. If it is paid excess, it will be refunded to you after the year end. So when you don't know the turnover to be assessed and the tax to be paid, you request the officer to give the reason for payment of tax on provisional basis. Then he will pass an order within a period not later than 90 days, then allowing you to file the details immediately. Whenever you file the details immediately, you can avail the provisional assessment. At the year end, when they make the final assessment order, if there is any balance to be paid, you should make the payment good. If there is no balance to be paid, and if it is excess paid, you will be given the refund. If you are not having money, you can execute a bond with the officer, and you need not pay the tax immediately. You can pay the tax at the end of the year when the final assessment is made. But the whatever security you are giving should be binding on the taxable person, and liability to be received from that particular security. Normally, the provisional assessment is valid for 6 months. The officer can extend the period to another 6 months. Joint commissioner or additional commissioner can extend for further 6 months. Commissioner of the particular state can extend by 4 years. Beyond 4 years, nobody is having power to check. Then what is scrutiny assessment? When you are filing the return with the particulars, raise queries for discrepancy. You will have to reply to be given within 30 days. When you give the reply, if the reply is correct, it will be dropped immediately. If reply is not correct, the assessment will be made. Discrepancies accepted but no corrective measures are taken, the officer will make corrective measures. He may ask for the department to go for audit, or he may arrange for inspection. So by this, the officer will rectify the errors made. you can create a file for audit under section 6 by the department, or if it is cannot be done by the officer, he may ask empaneled CA or CMA to audit under section 66. Then inspect or search as per section 67, or start the formalities to determine the tax due under section 73 or section 74. This can be done by the proper authority to collect the available revenue. Then what is best judgment assessment? When a person fails to get himself registered, one instance, then cancelling the registration but not paying the liability, it is a next instance. Then fails to file the returns. Whenever a best judgment is made, or when the assessee is failed to file the return, he can file the return within 30 days and ask for the waiver or cancel of the order. That is possible when you are not filing the return. When you have not got the number, or when the officer cancelled your registration, you have not made the payment of tax liability, then in that case they will pass an order under the best judgment. You will have to file only appeal, or you can seek the remedy from High Court. You cannot complete the assessment by requesting them to revise the assessment. Why? Because you are not a registered dealer to pass an order. When the assessment is made on you, you will have to make the payment immediately. And they have 5 years time to issue the assessment order. Then summary assessment. To protect the interest of the revenue, when you are filing a return with the figures which are not correct, the officer can proceed to make the assessment on summary basis. That is, when I am filing the return filed, say for example, I am giving the commercial rent at 12%. The officer decides at 18%. Then what he will do, he will give a notice to me to rectify. And if I am not rectifying, he will pass an order immediately. And when he passes the order, it is valid till the end of the financial year, and which will be reflected in the annual assessment. So, if there is any grievance, I will have to approach the Joint Commissioner and request him to withdraw the assessment order. If I produce all the relevant records required, the Joint Commissioner may ask the assessing authority to withdraw the order. This can be done only when the order is erroneous. If it is not erroneous, they will not do it. You will have to seek remedy in the appellate forum. Various forms. It is very important to know the number. GST ASMT 1, application for provisional assessment under 60. ASMT 02, notice for seeking additional information, clarification, documents for provisional assessment. You have requested for provisional assessment by filing ASMT 1, and the officer gives a notice to amend the details in ASMT 2. You will have to reply to the notice in ASMT 3. Then provisional assessment order will be made under ASMT 4. Then ASMT 5 is a security for filing the bond for provisional assessment. ASMT 6 is a notice seeking additional information, clarification, documents for final assessment. ASMT 7 is final assessment order. ASMT 8 is application for withdrawal of security. ASMT 9 is order of release of security rejecting the application. Under the GST, you should know all the numbers because they are very important. Then GST ASMT 10, notice intimating discrepancies in the return. Then GSMT 11, reply to the notice issued under section 61 intimating the discrepancies in the return. Then ASMT 12, order of acceptance of reply against the notice issued under section 61. ASMT 13 is assessment order under section 62. ASMT 14 is assessment order Procast notice for assessment under section 63. ASMT 15 is Shoka assessment order under section 63. ASMT 17 is assessment order under section 64. Then 17 is application for withdrawal of assessment order issued under 64. Then acceptance of the under section 64. So we will have a break for 15 minutes because the next session is GST audit. I will go up to 5:15 and at 5:15 I will answer your queries. So now the session is closed and there is a break for 10 minutes. You will have to rejoin at 4 p.m. My time now is 3:50. You can rejoin at 4 p.m. Kalisuri madam. Kalisuri madam. Hello madam.
Yes, sir.
I am giving you a break for 10 minutes.
Okay, sir. Okay, sir.
We will rejoin at 4 o'clock.
Okay, sir. The participants will be back by 4 p.m. today. It starts by 4 p.m.
Night presentation.
Very valuable information.
Please take the feedback on that.
Hey, voice கம்மி ஆயிடுச்சு. நான் ரிசீவ் பண்ணேன். நீங்க voice ஆச்சு கம்மி. நல்லா தெரியுது. ரஜினி கமல் சொன்னீங்களா? அதுக்கப்புறம் உங்களுக்கு கழிச்சு வாய்ஸே இல்லை. ரஜினி கமல்லாம் கேட்டது.
கமல் சொன்னது.
ரஜினி சொன்னேன்.
ரஜினி சொல்லல, கமல் தான் சொன்னேன்.
ரஜினி சொல்லி
இந்தியன்
ரஜினி கமல் வந்து ரஜினியும் எனக்கு ஒரு மாதிரி. அதுக்கப்புறம் வாய்ஸ் எனக்கு கேட்கல. வந்து உட்காரலாமா சரி அப்புறம் வேண்டாம் அப்படின்னு சொல்லிட்டு
இல்ல அதுக்கப்புறம் தோட்ட கொஞ்சம் இதுவாயிடுச்சு.
பெண்ணை டீ பிரேக்.
ஆமா 4 மணி வரைக்கும் இவனை காரணம் இந்த 4 மணிக்கு வர சொன்னாங்க.
கால் பண்ணட்டுமா? கால் பண்ணேன்.
எனக்கு தொண்டை ரொம்ப வலிக்குது.
சரி வரீங்களா? சார் இப்போ திருப்பி 4 மணிக்கு ஸ்டார்ட் ஆயிடும். உடனே வந்துடுவீங்களா? ஓகே.
நம்ம ஸ்கூல்ல உட்காந்துருக்கோம்.
உடனே வாங்கணும்.
வெங்கடேசன் சாயங்காலம் ஃபோன் பண்ணுவார். அவர்கிட்ட அந்த இது கொடுத்தோம். ஓடிபி எடுத்து வச்சுருங்க. அவர் 4 மணிக்கு மேலே ஃபோன் பண்ணுவார்.
1017 இப்போ தானே வெங்கடேஷன் கார்த்தின் அப்பா பையன்.
ஆமா
சரி. ஃபீஸும் ட்ரான்ஸ்ஃபர் பண்ணி பேமெண்ட் இல்லை 2 பே கொடுத்துருக்காங்க.
அண்டர்
அதான் ரெகுலரா கொடுக்குறேன் ஹெச்பி பேக்கேஜ்.
அதை முடிச்சு கொடுத்துறேன். நான் ஒர்க்கிங் இருக்காங்க.
யாரு?
OVS
அதுலயும் ஆன் பண்ணிட்டு அதுலயான சவுண்ட் வராது.
அதில் யூடியூப்
மூன்றரை மணி நேரம்.
46 ஸ்லைட் முடிச்சுட்டேன். இன்னும் 40 ஸ்லைட் தான். 4 மணிக்கு கரெக்டாக ஆரம்பிச்சு. ஆமாம். வரமாட்டாங்க டயத்துக்கு. நீங்க சொல்லுவீங்க 10 மணிக்கு 4:10 தான் வருவான். இல்லை 4 மணிக்கு வர சொன்னேன். காலை 4 மணிக்குள்ள வாப்பான்னு. கரெக்டாக வந்திருந்தான்னா கரெக்டாக இருக்கும். என்ன பாதி மீட்டிங்ல அப்படியே ஏற்றி குடிச்சுக்க வேண்டியதான். Madam, can I start now?
Yes, sir. You can start, sir.
After the break, we are now going to see the GST audit. Very important topic. All should be attentive now so that they can learn more. The audit team will visit the place of business and compare the available records. At that point of time, if the certificate is not displayed, then officer can levy 25,000 rupees as a compounding fee. Then your GSTN number is not specifically displayed, he can charge another 25,000. Whenever they come to your place and wherever you are, your business place and the branch should have the registration certificate. If a certificate is not there, he can levy 25,000 rupees as compounding fee. And even if the certificate is not there and if you have claimed input in that area, he can reject the input because it is taken from the not registered place. And very interesting to note is ITC wrongly claimed, then the officer will issue show cause notice and ask for the explanation. If the explanation says that it is wrongly claimed, then you will have to make the payment of whatever wrong ITC claimed. Along with that, you will have to pay penal interest of 24%. For the turnover not reported in the return, you will pay only 18% penal interest. For wrong claim of input tax credit, you will have to make a 24% penal interest. Whenever the officer is giving show cause notice, it is the duty of the assessee to reply properly. He should not say that the reply should not be like this. Normally what happens, if the officer inspects the place and notice is given, the assessee will reply, I have already explained all these things at the time of inspection. That is not the case, because whenever they give you show cause notice, it is not clear at their end. So you will have to give the reply with proper record at the time of replying the show cause notice. If you give like that, then the show cause notice can be withdrawn by the officer. If you are not properly answering the show cause notice, then the officer can proceed to the cancellation or penalty, levying penalty, etc. I will give you a hypothetical example. What happened to my client? My client is having a hospital, and in that attached is a pharmacy which is working. And they have been given a notice by the assessing authority, and my client have not seen the notice for 1 year. but we have filed the return up to date. On one fine morning, they have cancelled the registration. And I went to the assessment circle and explained that we have filed the return up to date. The only issue what we have made is we have not answered the notice. And that was in the spam register. So therefore, we were not able to locate the notice. On explaining this and after seeing the returns filed up to the month, the officer revoked the cancellation and restored the number. So whenever you are giving a reply to the officer, it should be categorically proved. You should not say, I have already explained this at the time of inspection. And many client is having the intention not to give the details. That is not correct. Whenever it is asked, you have to submit the details, then submit categorically what you want to say. When you say like that, the notice will be withdrawn or will not have effect of the transaction. So better you answer all the queries. The reasons for audit may be one of the following reasons. When the company or firm is always claiming input tax credit, that means always the purchases are more and the sales are less. A normal prudent businessman will not do like that. He will pay taxes at some point of time. And whenever you say that your purchases are more, there is every possibility that your output is not accounted for properly. Therefore, for this, they will come for inspection. And whenever you import the material from foreign country, the bill of entry will be generated in your name. When the bill of entry is generated, you would have paid one portion of IGST credit. The officer will come and verify whether you have claimed the IGST credit in the return. If you have not claimed the IGST credit and you have not reported the import, then there is every possibility that your books are not correct. So on all these grounds, they will come and inspect your place. Certain turnover transactions not reported. Say for example, you are effecting a bulk trade, and for the bulk trade you have not raised invoices. Then that invoice may not be reported in the return, and there will be a difference in the sales or output what you have reported. For this, the officer can come for inspection. Then very interesting transaction, bill trader transaction. That means you have purchased only bill from the bill trader. You have not purchased goods. The bill trader are persons who are notified as bill trader, and the transactions with bill trader will attract penalty at the appropriate rate. If you purchase from a bill trader, even though you have received goods and you have made the payment through bank, the officer will reject your input tax credit. For that, they will come for inspection and take action against you. Then in normal scenario, if your turnover is reduced too much in normal circumstances, in the COVID circumstances, it is different story, because many of the business firms were closed for nearly 4 to 5 months. So the turnover for the current year, that is 2021, will be very less when compared to the turnover maintained in 1920. Even the chartered accountants have reduced their turnover because of many assessees have closed their business and left their business. And if you claim the refund in excess of or more than what you are eligible, the officer can come and check your books of accounts. And very interestingly, when you charge wrong rate, the officer will come to your place. I will give you very clear example. The sanitizer now available in the pharmacy. The medicinal preparation are 12%, but sanitizer is taxable at 18%. And most of the pharmacy are selling the sanitizer only at 12%. On seeing this, the officer can issue a notice to you asking for the reasons why you have charged less. Because sanitizer is not medicinal preparation, it is a alcohol preparation. It is liable for tax at the rate of 18%. And similarly, when you are not in the habit of filing return regularly, the officer will visit your place. Why? Because when you are filing the return belatedly, you have the habit of showing lesser turnover. To check the transaction, the officer may inspect your place. Then annual returns are also, if not filed, the officer will come for inspection. Excess claim of ITC. If you are claiming ITC more than whatever you are eligible, then the officer will be interested to see your records. Normally, under the Tran 1, the assessees have claimed more input tax credit. For those cases, the authority have issued notices to the concerned department or concerned client. Then when you are answering the notice with proper, say for example, whatever record you have, then the officer go through the record and accept whatever you say. So the excess claim of ITC may be a reason for inspection. When the authority visits the place on inspection, they will verify all the records available in the place of business. They may take some records which are confiscated, and you will have to prove that record with your records. For example, there is a purchase bill and you have not accounted for the purchase bill, they will take copy of the purchase bill. If you account for that in the purchases account and made payment through bank, you can prove that and take back the purchase bill. So similarly, whenever they visit, they will try to verify the records and they will try to make an assessment that you are not a regular proper dealer. And thereafter, they will proceed in the way and to levy penalty. When the GST audit is taken by departmental audit, they will issue summon to you 15 days before the arrival. Then they will ask you to keep all the records. You will have to answer the queries within 3 months. And they will have to complete the proceedings within 6 months. So whatever may be the reason, you will have to produce all the relevant record. During the COVID period, we have received for our client for audit of their place. And what we have done is we have replied to them that we are affected by COVID, and in our place, if you visit, you will also take COVID and go to your house with COVID. So immediately what they said, you submit all the relevant records on e-portal. We submitted all the relevant records and the inspection is about to be closed. They have asked for one questionnaire, and the questionnaire we have prepared and submitted. After that, they will call us next week to produce the records. When we produce the records, they may close the matter, or they may issue some notice for if there is any demand to be made, they will issue a notice. But whenever they issue a summon that they are going to visit the place by 15 days, you should be alert and keep everything ready, including your certificate, etc. Then they will come and visit the place. They will ask for the return copy. You will have to submit all the return copies. Then they will go through one by one. Then they will decide whether it is correct or not. If it is correct at your end, they will accept whatever you say. And if you prove with records, they will leave the place without taking any reason for revising the assessment. So whenever they are coming to your place, you should offer them a proper place to verify the books of accounts, and you should provide them with all the facilities. If they are going to take some record, you will have to give the copy of the hard copy of the record, or if they are going to take the copy of the e-portal, you will have to give with the password. Otherwise, they will not complete the if you have paid less, they will ask you to make the payment good, and whatever short payment made, you will have to refund immediately. You will have to make the payment immediately. The proper officer may initiate action under section 73 or section 74, which is when if you are made a clerical error, section 73 will be initiated. If you pay the tax, it will be dropped. If you have suppressed some details, then section 74 will is automatically penalty will be levied. So they will give that stage. At any stage of scrutiny, inquiry, investigation, or any other proceedings before him, any officer is of the opinion that the value has not been correctly declared, he can call for a chartered accountant or a cost accountant to audit your place. The time allowed for the chartered accountant or cost accountant is 90 days. It can be extended by another 90 days. But before that, they will have to prepare and give the report. When they give the report, the fees will be fixed by the commissioner, and you will have to make the fees to the commissioner, and commissioner will pay to the chartered accountant or the cost accountant. When they conduct the special audit, and if they find out any error, then they will proceed under section 73 or under section 74. If it is a suppression, they will proceed under section 74. If there is if there is a clerical error, they will proceed under section 73. If there is a suppression, they will proceed under section 74. Whenever section 74 is initiated, the penalty is automatic. For 73, they will ask you to make the payment of taxes demanded or short paid amount. If you pay that immediately, they will close the matter and leave your place. Then compulsory audit. What is compulsory audit? When your turnover is beyond 2 crores and to 5 crores, then GSTR 9 is compulsory. GSTR 9C is optional. If your turnover is beyond 5 crores, GSTR 9 and 9C are compulsory. In this case, whenever you prepare your GSTR 9 or 9C, you will have to correlate with your books of accounts Then with your 2A, GSTR 3B and GSTR 1 are to be reconciled with the annual return. In GSTR 9, you can rectify the errors made in filing the returns. If the errors are rectified in GSTR 9, no penalty will be made. You will have to reconcile the return with your books in GSTR 9. If you do so, the penalty may not be attracted. If you are not reconciling the books of accounts with the returns filed, and if the auditor finds it out in 9C, the extra liability will be created by the auditor in Part 5 of GSTR 9C. He will create a liability for 9C. Then what happened? The officer will accept whatever the auditor has said, or it may be enhanced by the authority, and for that they will levy tax and penalty to the assessee. So it is always better on our front, we can rectify whatever error made in the GSTR 9, and the 9C will be accepting whatever 9 is there. If such being the case, there is no requirement. And interestingly, the 9C is prepared by the auditor. He will have to prepare the JSON file and hand it over to the client. Client will attach the JSON file to the 9 and upload the 9 and 9C. So in this case, without the knowledge of a client, you cannot do any other thing. So it is better to have the client in good humor so that he will update whatever you give. And it is the duty of the chartered accountant or cost accountant to rectify the error while filing 9. If the error is rectified in 9, there is no requirement of penalty under section 9C. Under the forms of audit, GST ADT 1 is notice for conducting audit. It will be given by the officer before 15 days of their arrival. Then GST ADT 2 audit report under section 65(6) will be communicated to the assessee. Form GST ADT 3 is communication to the registered person for conduct of special audit under section 66. So they will engage a chartered accountant or cost accountant. GST ADT 4 is information of findings upon special audit. So whatever findings is there, if you can answer the findings properly, it will be dropped. If you are not answering properly, it will be made as a suppression. Then suppression relating to supply of goods, service, stock, or has claimed input tax credit in excess, or has indulged in contravention of any of the provisions of this act. In case of transporter, owner, godown, or warehouse keeper is keeping goods which have escaped payment of tax, or has kept his accounts or goods likely to cause evasion of tax payable. In all such cases, section 67 and 72 will make the officer to search, seizure, and arrest the person. The provision of arrest was given from the Central Excise Act. Under the VAT Act, there is no power to arrest. Under the Service Tax Act, later the arrest provision was given. And under GST Act, the arrest provision is given upfront. If you are dealing with a bill trader, or if you are a bill trader and your chartered accountant helps you, both will be finding place in the prison immediately when it is found out. So you can read from the paper that many businessmen are arrested for bill trading purposes. Bill trading is arrestable or non-bailable event. So it is always better not to trade with the bill trader, but you will have to do business with the proper person. So whenever they inspect your place, they will give order in writing to inspect place of business, then search and seizure of the goods, an order to not to remove, part with, or otherwise deal with goods except with the previous permission of such officer. Documents or books or things so seized, if not relevant, to be returned in 30 days. Very important provision. When they are not related to the search, it will be returned back, or which are not relevant to the search, it will be returned back after 30 days. In my entire service of 3 decades, I have got only in 3 occasions the books of accounts recovered by the officer. On one occasion, it was taken on a wrong footing by the department, so they returned all the books. And on one instance, they have verified and found it is correct and returned back the books. And on the third instance also, the same thing was done. To seal or break open the door of any premises, or to break open any almirah, electronic device, box, receptacle to in which any goods, accounts, register, or documents kept, the officer is having right to put seal. Say, for example, if they are continuing the inspection for a day and it is not completed in the day, they can put seal and go with witness, and in the next day morning they can open the seal with the same witness and they can proceed inspecting the place. So this provision is available under the Act. If you are not obliging with the department, then they will say that the assessee is not cooperating with the department, and hence they are left with no other alternative to pass best judgment assessment. The other powers of the officers are inspection of goods in movement. They can check the goods in movement and levy compounding fee if required. If you are dealing with countermanded goods, then you can be arrested by the officer. And they can also summon you for giving the evidence and produce documents. Access to the business premises, which can be done. Officers to assist the proper officer. Say, for example, you are dealing with only imports, then they can ask customs officer to cooperate with the GST officer to find out the happening in their place of business. So they can request the customs officer to come to the place of business of the assessee and verify the connected record. The inspection is having many forms. GST INS 1 is authorization for inspection or search. INS 2 is order of seizure. INS 3 is order of prohibition. INS 4 bond for release of goods seized. INS 5 order for release of goods, things of perishable or hazardous in nature. And we are now going into the demand and recoveries under section 73 to 84. Section 73 deals with unintentional errors. Any tax has not been paid or short paid or erroneously refunded, or input tax has been wrongly availed or utilized. In all these cases, they can issue a show cause notice. If the payment of tax made prior to notice, it may be dropped. If payment of tax is made within 30 days of issue, no penalty. Penalty 10% or 10,000, whichever is less. Time limit, show cause notice 3 years from the date of annual return. Time between show cause notice and order is 3 months. And the penalty 10% of tax or 10,000, whichever is higher, will be taken. Intentional fraud, penalty will be 100%. Time limit of show cause notice and order is 6 months. Payment of tax before notice, penalty 15%. Payment of tax within 30 days, penalty 25%. Time limit 5 years from the date of annual return. Then payment of tax within 30 days of order, penalty 50%. So penalty will be levied on a scaling basis. For example, if the payment is made before the notice, then 15% will be penalty automatic. Payment of tax made within 30 days, penalty will be 25%. Then payment of tax made within 30 days after passing the assessment, 50% penalty is automatic. So Section 74 is for levying penalty for intentional fraud. It is not clerical error, it is an intentional fraud. Tax collected, not paid to the government. Show cause notice to be issued, penalty equal to tax amount, opportunity of being heard will be given, then order to be issued within 1 year of service of notice. Very interesting to note, whenever a person who has collected say 10,000 rupees and have not remitted 1,000 rupees, the tax and the penalty will be 1,000 plus 1,000, 2,000. So likewise it will go. And the time limit for a notice and the order is 1 year. So the tax collected, you cannot enrich yourself with public money. That is the motto of indirect tax. Therefore, it is always better if you collect some money from the party to remit it immediately to the government. If you remit like that, it may be recovered as penalty, but it will not hinder you. And there is an amendment for section 77. Originally, what happened, if you are paying for local transaction under interstate transaction, you should have paid IGST. Now what happened, you can pay CGST, SGST and ask for refund of IGST. Now what they have provided is, there is one form, form number 9 is for rectifying the wrong head of payment. You can make good the wrong head, that is IGST paid excess. You can ask them to transfer to CGST and SGST, and if you file the return within 10 days, it will be amended. Recovery proceedings. When there is a recovery, the officer can attach your property, number one, attach your bank account, and they can take the assets and sell the assets and attach the whatever proceeds they are getting to the tax portion. Recover money from persons who are liable to pay to the defaulter, deemed defaulter, or attach property. Officer may amend or revoke the notice. Whenever the amount is paid, he can amend the notice. Whenever amount is not paid, he can add interest and revoke the notice. Payment of tax in installments, if paid, they can give 24 installments, but it involves more procedure. Normally it will not be given very easily. For the purpose of protecting the interest of government, by order in writing, attach provisionally any property, including bank account, belonging to the taxable person, valid for an year. Forms of demand and recovery. DRC 01, summary of show cause notice. DRC 01A, intimation of tax ascertained as being payable under 1735, 74.5. Part B, reply to the communication for payment issue before issue of show cause notice. DRC 02, summary of statement. DRC 03, intimation payment made voluntarily or made against show cause notice. Then DRC 04. DRC 04 is acknowledgement of acceptance made voluntarily. GST DRC 3. DRC 5 is intimation of conclusion of proceedings. GST DRC 6 is show cause notice. Then the DRC 7 is a summary of the order. 7A is summary of the order creating demand under existing law. 8 is summary of rectification or withdrawal of order. 8A amendment modification of summary of the order creating demand under existing law. 9 order of recovery through specified officer under section 79. 10 notice of auction of goods under section 79(1)(b) of the act. 11 notice to successful bidder. 12 sale certificate will be issued. 13 notice to a third person under section 79(1)(c). 14 certificate of payment to a third person. 15 application before civil court requesting execution for a decree. 16 notice for attachment and sale of immovable property, movable goods or shares under section 79. 17 notice of action of auction of immovable property under 79(1)(d). 18 certificate of auction under class E of subsection 1 under section 79. 19 application to the magistrate for recovery as fine. 20 application for deferred payment in installments. 21 order of acceptance rejection of application for deferred payment in installments. 22 provisional attachment of property under section 83. 23 restoration of provisionally attached property bank account under section 83. 24 intimation to liquidator for recovery of amount. 25 continuation of the recovery. Then we are going into appeals. Appeals are dealt with section 107 to 124. Whenever an application is made to the first appellate authority by the assessee, he will have to file in APL 03 in triplicate form. Then 10% of disputed tax to be paid. Stay against recovery deemed. So if you pay 10%, the recovery of balance 90% is deemed to be stayed. And duration within 3 months from the date of receipt of the order or condonation 1 month. 3 adjournments allowed. Actually, I am appearing before the appellate authority from 1988. When I appeared before the tribunal of sales tax, one day I was shocked to see a notice under the Tamil Nadu General Sales Tax Act for the year 52 was pending, and they have taken about some 200 cases from 52 to 72. Then they have disposed of those cases because they are all time bound. The party may not be alive now, or party who made the transaction may have seen the death. So in those cases, the appeal cannot be continued for 100 years. So what they have done, they have closed that matter with available records, and it was transferred and closed. Under GST, you are allowed only 3 adjournments. The 3 adjournments will be given maximum of 1 year. Before that, the appeal order will be closed and you can get an order which is allowed or rejected. When the appeal order is rejected, the government can file the case, or when the appeal order is allowed in your favor, the government can file the next appeal with a 6 months period, and they have another 6 months as condonation period. That means from the date of receipt of the order, they can take 1 year to file the appeal petition before the tribunal. The result may be only allowed or dismissed or enhanced within 1 year from the date of filing of the appeal. They cannot remand the case. Why? Because when they remand the case will get another lease of life. So now it is only allowed or dismissed or enhanced. What is enhanced? Say for example, when the assessment is made, the proper officer made an assessment and levied 10,000 rupees tax and 10,000 rupees fine. But it should be actually 25,000 rupees. And the department representative made the claim in the appeal. Then the appellate authority can enhance the liability to 25,000 rupees as tax, 25,000 rupees as penalty. If the appellate authority is not accepting the claim of the assessee, they can dismiss the case. If they accept, they can allow the case. Then the department will go for next appeal. And the appellate authority can review the assessment if any representation received from the officer subordinate to him. Even on the reviewer, if the authority can change the decision, whatever they have taken. If a place of supply is involved, APL 05 is the document to be filed. It can go to national tribunal or state tribunal as the case may be. All other cases, state bench, you will have to file in the format APL 05. Appeal to be filed within 3 months from the receipt of the order. 3 months condonation period is there. Appeal fees ₹1,000 to be paid to the tribunal. And very interestingly, tribunal will not take the matter below the tax amount of 50,000 rupees. If you prefer the appeal also, they will set aside the appeal as not entertainable. So for going to tribunal, the value should be more than 50,000 rupees. Government can take 1 year time to go for appeal before the tribunal. From High Court, that is from appellate tribunal, you can go to High Court within 180 days from the date of receipt of the appeal order. Normally, the assessee will take the assessment order to High Court directly. Under GST, they cannot take it directly to High Court. Why? Because they will have to exhaust the remedy under first appellate authority and second appellate authority. Then only after receiving the order from the tribunal within 180 days, they can proceed to the High Court. And for certain cases, appeal is not entertainable under the Act. Order directing transfer proceedings from one officer to another officer. You cannot ask for transfer of proceedings. Order sanctioning prosecution under this Act cannot be challenged. Order to seizure or retention of books of account, register and other documents cannot be made. Order passed under section 80 cannot be appeal, and it is impossible to appeal. You can also go to Supreme Court when the appeal was pending before National Tribunal, and if High Court frames fit question on its own or on application, the Supreme Court can entertain the appeal and close the matter. Forms of appeal: APL 1 is appeal to appellate authority. APL 02 is an acknowledgement for submission of appeal. 03 is application to the appellate authority under subsection 2 of section 107. Then GST RVN 01, notice under section 108. APL 04, summary of demand after issue of order by the appellate authority, revisional authority, a tribunal or court. GST APL 05, appeal to the appellate tribunal. Then APL 06, cross objection before appellate tribunal. Whatever the grounds of appeal made by the appellant, who may be the individual or may be the government, cross objection to be filed in APL 06 whenever you receive the grounds of appeal. Then APL 07, application to the appellate tribunal under section 3 of subsection 112. GST APL 08 is the appellate appeal made to the tribunal. So with that, I am completing my session. Thank you very much for the patient hearing. The PPT will be shared by the Bharatiyar University to you. I have already submitted the PPT to the Bharatiyar University, and I will answer whatever questions you have. I will answer your questions. So if there is no questions, then I will hand over the proceedings to Mr. Jagadiswaran for completion. Vote of thanks and other things will be given by Dr. Jagadiswaran. Kaliswari madam, if there is any question, I will answer the question.
Yes, sir.
I think no question is there.
So they will be posting, sir. Dear participants, if you have any question regarding the sessions, you can post it now. The sessions are going to wind up. So they're posting the questions, sir.
You can read the question. I will answer the question.
Yes, sir. Summary assessment. I think they're asking the meaning of summary assessment, sir.
Summary assessment. It is an assessment made when you don't know the value of service or value of rate of tax. You can ask for the proper officer to make summary assessment. So he will make summary assessment, and you will have to pay tax on summary basis. And at the end of the year, they will, if there is a shortfall in payment of tax, they will collect the tax. If there is excess in payment of tax, they will refund the money to you.
Sir, if ITC related to bank charges, etc. of financial year 2019-20 is not considered till September 2020, can the credit be taken by filing annual returns?
If there is a input tax credit available, you should have availed the input tax credit in the month of September return. September return filed in October 22nd or filed before October 22nd. If you are not filing like that, then you are not eligible to claim the input tax credit. But if you are filing annual return earlier than September, you can avail the input in the annual return. Normally, nobody is filing the return. They file the return only in the extended time. Therefore, this question will not arise.
Okay, sir. So maximum limit of annual turnover in case of small and medium scale industries.
Yeah, up to 2 crores, you need not file 9 and 9C because it is deemed as you have filed the return. So, for if the annual return is not filed, you cannot rectify the error made in filing the monthly return. My sincere advice is there is no basic limit. You can file the annual return whenever or wherever it is required. You can upload the annual return and rectify the error made in the filing the return, because in up to the month of March, you have filed the return. Wherever there is a omission, you have taken it in April to September next year return. You have taken that. It should be reconciled with the previous year. For that, you will have to file GSTR 9 and 9C if required.
Okay, sir. Sir, then what is the difference between provincial assessment and summary assessment?
Yeah. Summary assessment is an assessment made during the current year. When the final assessment is made, it will be rectified. But provisional assessment is if you are filing a month return wrongly, then officer can give a notice to you. Even in the notice you are not rectifying the error, he will pass an order. You will have to file an appeal within 30 days from the date of receipt of the order, and you will have to set aside the demand, or you will have to contest in the court in the appellate forum and drop it. If there is a error in the side of government, the provisional assessment will be withdrawn by the Joint Commissioner.
Okay, sir. Dear participants, kindly post your questions regarding today's session. If you have any doubt, you can post it in the live chat box. Dear participants, it is not only from the today's session, previous session of sir's question also were end up due to some network error. So in that case also you can post any questions if you have. Sir will answer the questions which you are posting in the live chat box. Sir, what is bill trading?
Bill trading. Wonderful question. Say for example, if you are a seller, you are selling cell phone to me. When you sell cell phone to me, what you will do? You will raise an invoice, hand over the cell phone to me. You will give both invoice and the goods to me. I will make the payment either by physical cash or by checkbook or check, whatever may be. In all these situations, there is a transfer of property and payment is made against the bill given. The bill trader is a person who sells only bill. He will not sell the transaction. That is, he will not give the goods. He will sell only bill. It is done whenever they get goods without bill, they purchase invoices from the bill trader and use it. In that case, it will be caught by the authority, and the input claimed in the particular invoice along with the interest will be collected with penalty.
Okay, sir. Sir, whether an individual applied two GST registration numbers simultaneously in two different business names.
What is the necessity to have two business names? Because if I am the chartered accountant of you, I will encash both the registration. Why? Because I will have to file return for every month. I will have to file income tax return. I will have to give annual return. And if you have more than one registration, you are going to pay me more. So it is up to you to have more than two registration. And in my sincere opinion, maintaining one registration is maintaining a wife. Very difficult to maintain. So more than one is superfluous and it will land you in trouble.
So what is coordination?
What is coordination?
Condonation.
Condonation. Say for example, if I receive the appeal assessment order on 12/11/2020, I can file an appeal within 3 months. 3 months is expiring on 12/12, 11/12, and 10/10/2. On 10/2/21, the time limit expires. Then from that day onwards, I can file the appeal with a condonation petition. That is, for another 3 months, the appeal will be entertained. But I will have to give proper reason for filing the appeal belatedly. If I am giving the reason properly, the authority will accept and condone the delay and accept the file. For condonation, there is one specific hearing will be there. Then after the hearing, you will have to go through and proceed further.
Okay, sir. Dear participants, if you have any queries regarding today's session or the previous session of SIRS, you can post the questions.
What is the GST to buy electronics goods generally? If buy the electronic goods like desktop for educational purposes, then GST will be applied or not? Definitely the GST will be applied. We are not bothered about your usage. So definitely GST will be applied even if for education purpose, if you buy, it is liable for GST. You cannot claim input tax credit, but I will charge the GST. What is the procedure for changes of trade name under GST? Beautiful question. I think Swapna Satish madam have asked that question. What is the reason why you change the trade name? Because if you are a proprietor, your legal name is the name available in your PAN card. So in that case, legal name, you can change the trade name wherever required. But you will have to apply to the proper officer. After going through your application, only if he accepts and gives certificate, you can change the trade name. Otherwise, you cannot change the trade name. Any other questions? I will wait. You can ask question. I will answer.
Yes, sir. Dear participants, so sessions are open now. Sir is also on sessions for your questions and queries clarifying sessions area. So you can post your questions regarding the session. So since it is the last day of the sessions, you can post the questions regarding GST the entire session.
Whichever is possible for me, I will answer.
Kali, sorry.
Yes, sir.
We can ask opinion from our participants
Okay, sir.
regarding our program.
Feedback.
Feedback.
Yeah, participants, you can also share your feedbacks apart from questions also. So there is one more question, sir. What is the nominal fees for filing GST monthly return, annual return, and GST audit in case of small and medium scale industries?
There is no fixed money for that. It depends upon your entries available. Because for a small trader, there may be 200 entries to be verified and it will take time. So there is no fixed rate for filing the return. It is the demand and the supply.
So why service charges applied on any government job exams has service charges? This service charge is under GST?
Any service charge if you receive, it is included in services. So therefore you will have to pay 18% tax.
Okay, sir. Whether GST will be charged for high sea purchases into India, sir?
Very good question. I think the Bala Gopala Krishnan Ramakrishnan has asked that question. High sea purchase. What is high sea purchase? You should know. when the goods were originally imported through water. In the actually high seas purchase was taken from Tamil Nadu General Sales Tax Act. In that, when the act was framed by Sir Rajagopalacharya in the early 1930s, Tamil Nadu was the first state to introduce sales tax, and it was introduced to the worldwide. And many states are now encashing the benefit of Tamil Nadu Sales Tax Act. In that, at that point of time, there was no movement through air. So what they have done, the goods will come into the Indian frontier from the banks. 25 Nottingham miles is the distance under which the assessment can be made. If the 25 Nottingham miles is not crossed, then the high sea purchase will be affected by transferring documents. And in February 2019, the amendment came in the GST that high sea purchase is not liable to be taxed thereafter. Before that, it is $1 million question. They can charge tax. And whenever and subsequently under the Central Sales Tax Act, Section 2D was amended to include the bonded warehouse, including the high sea purchase. And whenever you are taking bill of entry, which is the document of title, then the assessment will be made on the end user. So thereafter, whenever you can bring the goods inside the customs port, and only when you release the consignment without transfer of document or without taking the bill of entry, then high sea purchase is there. From February 19 onwards, high sea purchase is not taxable.
Okay, sir. So while filing the income tax returns, if anyone forget to add the other income, how to refile it again? Can it be done by self?
Yeah, you can file a revised return under Income Tax Act. Because whenever you are revising the income and increasing the tax liability, the income tax authority will accept the revised return.
Okay, sir. Dear participants, if you have any queries, you can post it in the chat box, or else we can end the sessions. The final day of the session, we can end it now. Sir, in manufacturing company, raw material and spare purchases for 18% and sell-finished goods for 12%. In these case, can we claim excess ITC paid?
Definitely, it is called as rate difference in purchases. It is 18%. Your sales is 12%. You can avail the refund by proving the document.
Okay, sir. So, whether the TDS, TCS of GST and income tax will be reconciled?
TDS under GST is a separate story. TDS under income tax is a separate story. Both are to be dealt under the specified act. When I deal with government company and raise invoice, they will charge me TDS and remit it to GST department. That amount I can adjust in the next month return. TDS under Income Tax Act, when they pay the TDS, when they pay the money, they will deduct TDS. I can adjust it only at the time of filing my income tax return. Both are different subjects under various topics.
So, I have one question, sir.
Sure.
Sir, can you explain TDS in case of GST law, sir?
Very interesting question. If you are a government company,
Yes, sir.
or your company is formed by act of parliament or assembly, then If I am dealing with you and you have given me purchase order to supply goods worth rupees 2.5 lakhs every month, then in that case, when you make the payment to me, when the purchase order exceeds 2.5 lakhs, you are bound to deduct 1% TDS on my GST transaction. And you will remit the 1% GST in GSTR 7 by filing to the portal. The amount will be credited to my account when I accept the TDS from you. It will be credited to my account and I can adjust this and make the payment for next month. So this is the wonderful provision under TDS Act of GST.
Okay, sir. Thank you, sir. Dear participants, if you have any queries, kindly post it in the live chat box.
Sorry.
Yes, sir.
Okay, no more question, I think. Huh?
Yeah, sir.
Okay. Dear participants, I hope that every participants have gained knowledge through all the sessions delivered by our dynamic resource persons during the 10 days online national skill development program on GST registration, assessment, and filing of returns. This is the time for sharing your opinion about our program. This is a feedback time. Those who are willing to share your opinion, you please you can join uh, through Google Meet and you can deliver your feedback. Um, Kaliswari
Yes, sir.
kindly send a Google Meet link to the participants. Those who are willing, they can join. Then they can tell their feedback about the 10-day program.
Sure, sir.
Okay. Murali sir,
Sir,
sorry for the inconvenience. Please wait few minutes, sir.
no problem, sir. I am waiting, sir.
Okay, sir. Okay, sir.
Dear participants, it is for your kind attention that the Google Meet link has been shared in the WhatsApp group. Whomever is willing to share their views live, you can join the link and you can share your views to the resource person directly.
I request Murali sir,
Sir?
please stop your presentation, sir. Then
Okay,
only
sir.
we can see participants' face.
Okay, sir. Okay.
Dear participants, by the way, you can keep on interacting with the resource person also.
Murali sir. Murali sir. Murali sir.
By unmuting your mic.
Hello. Sir, this is Balagopalakrishnan from Coimbatore.
Okay, sir. Okay.
So,
Good evening, sir. Welcome you, sir.
good evening, sir. Good evening, all for the this one, our organizers and the resource person and the participant. So, I was working in industry in different project management side, but I have some finance background. I have done my MBA finance. Right now, I'm doing my PhD in finance also. So, this one GST, I have attended some 2-3 programs, but which was not giving the full details about the entire spectrum of GST. But here in the 10 days, we got to know all the aspects of GST, step by step, from registration to that assessment and rectification. Everything it got covered. It is a wonderful session. It is a very informative and insightful session, sir. Thanks for the organizing team and the resource person to enlighten us.
Thank you, sir.
Thank you, sir. Thank you. Thank you. Thank you so much.
Yes, participants, you can keep on sharing your views. We have opened the meeting link for your convenience, so you can keep on sharing your views regarding the sessions and resource person and the entire experience towards 10-day sessions also.
Sir, I have a request. May I?
Yes, sir. Yes.
Okay, sir. Welcome you.
I'm Dr. Emerson from West Bengal. It will be very beneficial for all of us if all the PPTs can be shared in the group.
Sir, your suggestion is already accepted and it will be shared in the group. So once we receive the entire 10 days PPT, it will be directly shared in the group so that everyone can utilize it.
Yes. And when are you going to conduct such webinars in the near future?
Okay, it will be decided, depends upon our resource person. Murali sir say yes, definitely we are ready to organize this kind of program in future.
Okay. And it must be a webinar.
Okay.
Not a seminar. Otherwise, we from the other state will miss it.
Okay. Okay.
We will have one seminar also,
Oh.
so that we all can meet.
Yes, yes. Please share the information in the group, sir.
Yes, sir.
We will
Okay,
eagerly join.
definitely we will share.
Yes, sir. Yes, sir.
Okay. Okay.
This is the best workshop I have ever attended. Very
Thank you,
nice,
sir.
very nice. No words to express the relevance of the workshop.
Okay. Okay. Thank you. Thank you.
Dear participants.
Hello, sir.
Yes, sir. One more participant is willing to share the views.
Okay.
Hello, good evening to all. Respected ma'ams and all other people.
Sir, kindly please increase the volume, sir. Yes, properly.
Hello. Hello.
Yes, sir. Yes.
Hello. Good evening to all my respected sirs and speakers and all organizations and all listeners. As a student, I think this is a very informative webinar because actually I'm from West Bengal. I'm currently studying in MT Computer Science. Beside this, I was training on EDP, Entrepreneurship Development Program. So that time, I feel that GST training will be necessary for me. But you provide this type of 10 days seminar. So as a novice of beginner as a student, means it helped me for more informative. Thank you. And if any this type of webinar you will provide, I must join if you provide.
Okay. Okay, sir. Thank you.
That's
Okay.
all.
Thank you very much, sir, sharing your views about our program.
Okay, thank you, sir.
Good evening, sir.
Good evening. Good evening.
Sir, I'm a UG student, so I did not have more knowledge about GST. When GST came,
Okay,
we
come
saw
to
many.
video mode. Come to video.
Sorry, sir, I'm attending in a system and I don't have a camera
Okay,
webcam.
okay, no issue. Okay, okay. Share your views.
Yes, sir. When GST came, in newspapers, we used to see many criticisms, and many people will speak in favor of GST. But as a beginner, I didn't have more knowledge about GST. As I attended this workshop, I got a basic view about GST. And thank you, sir. The session was very interactive and very knowledgeable. All the resource persons, thank you very much, sir. Just uh, convey my thing to all the resource persons, sir. Thank you.
Okay, okay.
Thank you, madam.
Thank you.
Yes, participants, apart from posting your messages or your views through live chat box, you can also interact. So for your convenience only, we have opened the link and we are waiting for your views only, so you can share it directly. Whomever is willing to share, it can share it now. Yes, participants, you are posting your wishes and you're conveying your messages through chat box only. You can share it directly. It would be more good if you share it directly. And one more thing is like, it will be a memorable thing for us if you are sharing your views towards us, and it would help us in upgrading our program in upcoming days too.
Okay, Kali, sorry.
Yes, sir.
Okay.
Hello, hello, sir.
I think someone is trying to
Yes,
share.
yes.
May I ask a question?
Yeah, you can ask. You can ask. Sir.
Actually, as a student, this 10 days is very important. I always say, I also send the feedback. What what kind
So
of
sorry for interruption.
hello,
Can you please increase the volume so that resource
hello, hello?
Okay, Kali, sorry.
Yes, sir.
Okay, feedback time is over. Huh?
Okay, sir.
Okay. Okay, now it is my privilege to propose the vote of thanks to acknowledge the contribution of all pure souls who supported and worked hard from day one until now, launching the program successfully. First, our sincere thanks to our authorities of Bharatiya University for supporting uh, to launch this program. I am grateful to thanking all the eminent and esteemed resource persons, CA, Murali sir, Renuga Murali madam, Chartered Accountant Shankar sir, Chartered Accountant Anand sir, Chartered Accountant Shankar Narayan sir, uh, Chartered Accountant Swasini Kanapati madam, Chartered Accountant Bhuvaneswari madam, Chartered Accountant Ganesh Prabhu Palakumar sir, for all 10 days for showing their support in the form of delivering your knowledge and skills to entire participants to equip themselves through your lectures from day one to till now. Really, I thank all the resource person for accepting our invitation or deliver your lecture uh, throughout the program. Um, uh, I want to share few words about Murali sir. When I talked to Murali sir, I I didn't feel he's a resource person. He is an unknown person to me. I really when I talk to Murali sir, that time I feel uh, he is my well wisher of me. Whenever I approach him, he is appreciating me. He is motivating me. He is uh, a source of energy to me to organize this kind of program. Really, I thank you, Murali sir,
Thank you, sir.
your support from day one to till now, sir. Thank you very much, sir. Really, I enjoyed your session. Your session is more informative. Um, uh, Enthusiastically, I participated. I was inspired by you to learn more GST.
Very good,
Thank
sir.
you so
Very
much,
good, sir.
sir. Thank you so much, sir.
Thank you, sir.
Then I extend my heartfelt thanks to all the participants for attending all the sessions enthusiastically. Without your dedicated support, the program is not successful one. I know that how much pain you all have taken to attend the sessions from day one to till now. I thank you very much, everyone, for your kind cooperation for the success of this program. Okay, thank you all. Now I call upon Kaliswari to convey your wishes to all. Kaliswari? Kaliswari?
Yes, sir. Yes, sir.
Okay, okay.
Thank you, sir. I first of all thank Murali sir for being with us today. I thank all the resource person from day one to day today for the final ending sessions. It was a pleasure having Murali sir, and it was my pleasure that I am one of the part of RUSA projects and having getting knowledge through the live chartered accountants like Murali sir and all. It is my sixth session going live with Murali sir and gaining knowledge. So before the start of session also, Murali sir was explaining me about sessions only. He's such a soul that like he's very friendly with everyone. You can anytime you can contact him and you can gain knowledge regarding the sessions or anything related to GST and all. So he's such a soul, and it is our pleasure that he's one of the part of the RUSA programs and gaining his knowledge and experience towards us. So I think I am also one of the participants in this. So whenever we are setting a question for the assessment, I would go through entire slides and presentations and videos, entire thing, and I will be setting a question also. So this helped us, like the resource person's content delivery helped a lot to do more. And we are also planning to do more such programs with the help of these kind of resource persons who are eminent in their field. So thank you, Murali sir, for being with us today. I wholeheartedly thank from the participant side also, and from School of Commerce, Bharatiya University, and Dr. N. Jagadishwaran sir, and myself. Thank you for being with us today, sir.
Thank you, madam. But we are also learning when we present papers.
Okay, sir. Advance happy Diwali, sir.
Thank you, sir.
Okay, thank you.
Advance
Sir.
happy Diwali to all.
Okay, sir. Thank you. Thank you. Dear participants, advance happy Diwali.
Thank you, sir.
Okay, thank you. Thank you.
So it is for the kind attention of the participants that today's test, that is assessment test links will be posted on time, and it is your criteria to fill it by tomorrow 8 p.m. And after that only the assessment process will be started. So everything will be conveyed through the WhatsApp group, and the PPTs will also be shared through WhatsApp group. So any inconvenience or any kind of queries, you can contact the admin of the WhatsApp group, that is me. So anything you can contact me, but entire procedure of certificate issuation or anything will be conveyed only through WhatsApp group. So please kindly follow the instructions given in the WhatsApp group. So any kind of queries, you can contact admin. I once again wish you all, the participants on YouTube also and in the Google Meet also, a very happy Diwali and safe Diwali. Stay safe.
Yes, sir, Murali sir.
Thank you, sir. Thank you, sir.
I will contact you, sir.
Definitely, sir.
Okay.
I'm waiting.
Okay, sir. Thank you. Thank you. Thank you.
Thank you.
Thank you, Murali sir. Thank you.
Thank you, madam.
Happy Diwali, Murali sir. Stay safe, sir.
Yeah, the happy Diwali to Jagadishwaran sir and Kaliswari madam.
Thank you, sir. Thank you so much. Okay, participants will be closing the Google Meet. So we'll all stay connected through WhatsApp group. Any information, we'll be posting it in WhatsApp group. Thank you all. Stay safe.